In mid-2011, the global economic recovery is faltering as some major new challenges have emerged which have shaken global financial markets. The most important challenge is the weakening US economy, which is the world's largest economy. So there are signs of economic growth slowing, and there is also a potential government debt crisis. So the government reached its borrowing limit of $14.3 trillion in May 2011. And in July, there was much political wrangling about how to raise the ceiling and how to cut spending. And although the government did manage to do this before the deadline, the Standard & Poor's rating agency still downgraded the US credit rating for the first time in its history. And this has really undermined investor confidence in the world's largest economy. There are now fears also of a double-dip recession as US unemployment is still persistently high at around 9.1% as of July 2011. Any slowdown in the US economy or any double-dip recession would have global repercussions because, as well as being the world's largest economy, the USA is also the world's largest consumer market. As well as the debt problems in the USA, there are also continuing concerns about debt crisis contagion within the Eurozone region. So we've already seen bailouts to Portugal, Ireland and Greece, and there are now concerns that the debt crisis will spread to the larger economies such as Italy and Spain. Italy and Spain are the third and fourth largest economies in the Eurozone, and so there is a really big question mark about whether there will be the ability or even the willingness to bail out these economies if the debt crisis did escalate. Both countries are suffering from weak economic growth and weak government finances. So Italy actually has the second highest public debt in the Eurozone at around 120% of its GDP, and the Spanish government deficit is at around 9.2% of GDP. As well as these recent challenges, the global economy was also shaken earlier in 2011 as problems hit the world's third largest economy, Japan. So the Japanese economy actually dipped back into recession following the earthquake and tsunami in March 2011. The country's industrial production was hit, and this also had an impact on global supply chains. There is a glimmer of hope, though, for Japan, as reconstruction efforts in the second half of the year should provide a boost to the economy, but some analysts are concerned that this is just a temporary stimulus. So once these effects have passed through the system, Japan will also have to address its huge government debt. And Japan actually has the highest government debt as a proportion of GDP in the world at around 220% of its GDP. As well as problems in major advanced economies, we are also now beginning to see signs of overheating in major emerging markets. So inflationary pressures are evident in countries such as China, India and Brazil. So annual inflation in China, for example, was at 6.5% in July 2011. If these inflationary pressures continue and act as a brake on economic growth, then this would also have global repercussions because of the fact that emerging markets have been leading the global economic recovery and have actually pulled the world economy out of recession. The other major shock to the global economy earlier in the year was the uncertainty around the protests and revolutions in the Middle East and North Africa. So this began with the revolutions in Egypt and Tunisia, and social unrest then spread across the region. So this resulted in a spike in global oil prices, which obviously put pressure on businesses and consumers around the world. Although commodity prices have now stabilised, the pressures still remain on the upside because we are still seeing social unrest in countries such as Syria. And if this unrest did spread to larger oil producers such as Saudi Arabia, then we would expect to see another spike in global oil prices, which would once again put pressures on the global economy. So to sum up, the atmosphere in mid-2011 is one of uncertainty, risk and volatility. In fact, the global economy is at its most volatile since the global financial crisis of 2008. There are signs, however, that markets are beginning to stabilise and some actions are helping to calm investors. So G7 leaders and the European Central Bank have recently committed to ensuring financial stability. We've also seen the ECB attempting to buy up Spanish and Italian bonds this week. And the US Federal Reserve has just announced that it will keep its interest rates at very low levels until 2013. So all these actions will help to stabilise and calm investor fears and should stabilise the global financial markets. However, the atmosphere of uncertainty will certainly continue in the coming weeks and months. Euromonitor International forecasts that world GDP growth will slow in 2011 for both advanced economies and emerging markets. Emerging markets will still outperform advanced economies as their economic growth will be 6.5% in 2011 compared to just 2.1% for advanced economies. The atmosphere of risk, though, will have a major impact on consumer markets and consumer confidence in particular. Consumers have already been holding back following the global financial crisis. They're trying to address their household debt levels. And so this atmosphere of uncertainty will mean that consumers will continue to tighten their belts and will want to wait to see what happens, particularly for their employment prospects. So we can expect consumer spending to remain well below potential into 2012.